Japanese stocks see their biggest plunge in 2 years. A key read on China manufacturing unexpectedly drops to recessionary levels. Speculation on a ramp down in Fed stimulus continues apace, and we are down just 38 points in the Dow. What a world, what a world. With more on the story behind today's market action, this is the MacDesk Floor Report for Thursday, May 23rd. I'm Rebecca Darst from the Market Access Center here on the floor of the New York Stock Exchange. Let's walk back over the action overnight. Global markets walked into a fair amount of uncertainty after U.S. stocks closed lower as market participants honed in on testimony by Fed Chairman Ben Bernanke before the Joint Economic Committee on Capitol Hill to the effect that the Fed could take a step down in its pace of purchases over the next few months. Stocks reversed lower as traders looked for semantic evidence of the beginnings of a so-called tapering off of bond purchases. While it was a soft close for U.S. stocks, the sell-off in Tokyo took off with a roar, with the Nikkei seeing its biggest one-day drop on heaviest volume since the aftermath of the Fukushima nuclear disaster in 2011. Index dropping more than 7% and sending yields in the 10-year JGB up to 1%, sparking a liquidity injection of 2 trillion yen by the Bank of Japan to bring yields back in line. Japan's economy minister Akira Amari was on the record overnight telling journalists there was no need to be perturbed over the volatile action in stocks. The pressure in Asia overnight was compounded by an unexpected bit of bad news from China. The HSBC Flash PMI came in at a reading of 49.6 for the month of May. Anything south of 50 designates a contraction, and this was the first such contractionary reading in 7 months for China, coming on a day when traders were particularly disinclined to appreciate the ambiguity. Europe opened in lower territory on follow-through from the Pacific Rim, and a series of regional PMIs failed to improve the sentiment. French, German, and Eurozone composite PMIs came in a little higher than market analysts expected, but still at recessionary levels. And a Spanish auction of 3-year and 5-year bonds drew higher than expected yields. All industry subgroups in the Stoxx Europe 600 index ended the day in lower territory. Here in the U.S. pre-market, we had a nice pop to the upside for Hewlett-Packard following that company's earnings, and a better than expected read on weekly initial jobless claims, which came in at 340,000 last week. Market was looking for 348. These bright spots had little impact until U.S. markets lifted off their opening lows at the top of the 10 a.m. hour as April new home sales came in better than expected, taking treasuries and precious metals off their earlier highs. New home sales showed an increase of more than 2% to 454,000 last month. This followed a sizable upward revision for March, so it was a compelling momentum indicator to traders today and reason enough to buy the dip in the market. We're still in slightly negative territory in both the Dow and S&P, but well off that triple-digit sell-off that was materializing off the open. And the volatility index, which made a brief spike above the 15 level early today, is up less than half a point at 14.21. As we also mentioned in the midday today, we have been seeing some willing buyers of calls and sellers of near-term puts in some of the Japan indexed ETFs. So it would seem that a number of traders with a relatively short-term trading outlook have been willing to fade the weakness in Japan today. Heading into a long holiday weekend here in the U.S., let's take a look at the global macro releases set to move markets next week. On Monday, May 27th, U.S. markets are closed for the Memorial Day holiday. We'll be back on the floor on Tuesday for May's small business confidence data from Japan and consumer confidence from France, data from France as well as from the U.S., along with March S&P Case-Shiller home prices and May manufacturing data from the Richmond and Dallas Fed regions, along with a read on the state of the luxury customer segment as Tiffany reports earnings. On Wednesday, we've got Japan's large retailer sales for the month of April, a string of regional CPI readings from Germany, as well as May unemployment data, Eurozone money supply data for April, a rate announcement from the Bank of Canada, and earnings from women's wear retailer Chico's. Thursday is a data-heavy session, particularly out of Europe and the Americas. The UK will release May nationwide house prices and the Lloyd's Business Barometer. Eurozone data on tap includes May economic confidence, industrial confidence, and the business climate indicator. Italy will report its April PPI. Canada will release its April industrial producer price and raw materials price indexes. And we'll get a second read on U.S. Q1 GDP, weekly jobless claims, and pending home sales for the month of April, along with earnings from Joy Global, Costco, and Lionsgate Entertainment. We'll end the week with a heavy day of Japanese data, to wit, April household spending, industrial production, housing starts, vehicle production, CPI, and jobless numbers. France will release consumer spending numbers for April, along with net consumer credit and mortgage approvals from the UK. A May read on Eurozone inflation and employment, Canada's Q1 GDP, and here in the U.S., April personal income and spending, May Chicago PMI, and University of Michigan confidence. We'll be following all of the action as it happens from here on the trading floor, so check us out next Wednesday for the next MacDesk Floor Report.